Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, updates, and more. I am your cycling psycho of a host, Tyler Otto, and I'm joined by the soccer superfan, Jeremy Van Grohl. What a time to be alive for niche sports, Jeremy.
Yeah, right. Can we alienate like 90% of our listeners, which is like 9, just with some thoughts? Yeah, Tour de France in like the 11th or something stage. I know you're a cycling guy. What's your take?
Yeah, I mean, it's a fun one again. The two guys are battling out the top, Tadej Pogacar and Jonas Vingegaard. And yeah, we just lost the other listener now. I'm so sorry, but it's a good race this year. The big four are awesome. No, not KPMG and Deloitte and all them. They have a legit big four. It's great. It's fun. But yeah, we haven't talked about the Copa America either.
Yeah, Copa America and Euro is going on. 2 of the semifinals, and both of them happened yesterday. So in Euro, who was it? The Netherlands, which I call the motherland, being Dutch, is playing England today, I believe, in the other semifinal. And then Spain beat England with a 16-year-old had a goal in that game. Oh. Just crazy. Yeah.
Did he rush the field and just snuck on?
No, he's actually on the team, which is just crazy. Yeah. But then, in Copa America, the U.S. was disappointing as usual, right? So I believe it was somebody beat Canada yesterday, and I'm failing on the name of who that was. Argentina. Messi scored, and now the other semifinal is Uruguay and Colombia. So just love watching some soccer now and then. All the listeners are gone.
Yeah, we lost every listener. Sorry, folks. So no pressure for us the rest of this episode now. No one's listening. We're good.
Yeah, right. Good.
Speaking of disappointment, though, did you hear about what federal institution issued a cease and desist order to Evolve Bank and Trust?
No, I did not see this one.
You want to take a guess?
The Federal Reserve?
Yes, you are correct. The Federal Reserve issued a cease and desist to Evolve Bank and Trust. Now, for those of you that don't know, David Leary and Blake Oliver covered this at length on their podcast recently because Evolve got in trouble. Basically, some of the companies they worked with went bankrupt because they were commingling funds amongst all their different business partners, and they went out of business. Not Evolve, but Evolve basically because they're getting in bed with Mercury and Brex, and they used to be part of Relay, and their standards are pretty lax. The Federal Reserve has issued a cease and desist. Now, that was already news, but this is why I bring it up here, because that was back in June when they got in trouble. As of this week, they have issued a notice that they got hacked, that a lot of customer information got taken, including account numbers, including names, date of birth, social security numbers for tons of depositors. So if you were using Relay, if you were using Mercury, which is another neobank, FTX was tied up in this. There are so many different softwares. You should understand if Evolve was behind it, because if they were the bank, they were the chartered bank storing all the funds, and it was a tech company sitting on top of it, your information could have been leaked. They're offering identity protection out of there. But Jeremy, I think this is a great time to call out, you and I as business owners, our social securities are out there all over the place, man. And especially trying to get access to American Express for some clients, and you have to give your information there as well. You, I, and probably any other business owner, our information is out there. I highly recommend, if our listeners haven't done this, you can go to the big 3 reporting bureaus, Experian, Equifax, and TransUnion. Go to their website and click on the freeze button, and you can freeze all new accounts being created in your name. Now, if you ever want to go for a home loan, an auto loan, create another credit card, you just log in and turn it back on. But that is probably some of the cheapest insurance you can buy right now. If you have any concerns on this, is going and locking your credit. Do you feel like most people know you can even do that?
I may not have known that you could even do that. So that's great knowledge. I appreciate that. But yeah, great idea to do it. Because even didn't Ticketmaster just get hacked too? And how many people have used that awful organization and paid all their junk fees? There's the soapbox. But yeah, why not do it if it's that easy? Just one more thing. We just log in, take 5 seconds, unfreeze it if you're going to do anything. But how often do you do that anyway? That, if you're not Tyler Otto opening a new bank account every month or so, right? Just once a year.
That specialty bookkeeper's opening that up. So it's, it's not me. To go back on it, this is after they already got in trouble. So the partner they worked with was Synapse, and Synapse essentially had 85 billion, a big amount of money go missing because they were issuing payments, but not actually reconciling it because they didn't know which business partner the money belonged to. Back to Evolve, they said the ransomware attack, what they thought was originally a physical hardware malfunction, ended up being a ransomware attack by an organization called Lockbit. And they say they gained access to their entire systems when an employee inadvertently clicked on a malicious internet link. Yes, an entire banking platform was compromised from one employee clicking on one malicious internet link.
Yeah, I mean, you can't be too careful now. Like our whole last episode, we're talking about the fraud, and it is there. It is rampant. I just about every other week tell that to my team. Like any questions whatsoever, don't click on it. Ask the questions. You have to do it now.
Yeah, I keep considering like, should I offer full controllership to my clients? We'll pay their bills. We'll do payroll. And no, I want no part in that. I never want the ability of anyone in our firm having the access to move their money, because if we get hacked, I don't want to be the ones with the keys to their kingdom.
Yeah, you smart. Yeah, one other article, this hot off the press today, so it's the 10th, and this just came out. You see this? Intuit is laying off 1,800 members of its staff to cull the herd. I think it said that it was low-performing employees and specific executives that they're pulling from their herd here, and I love the spin they put on it, that they're going to rehire the same amount of people next year, but as more lean and AI-based labor force. Yeah, so I don't know. What are they doing?
Next year or next month, the one I was looking at. Now, granted, I got my news source from LinkedIn, so maybe we shouldn't do a podcast without having the full details. But Wall Street Journal, yeah, they're saying that they're going to close their Boise, Idaho and Edmonton, Canada office and focus after engineers. I don't know if you saw this, but they've started rolling out an AI assistant in select QuickBooks files. Almost every single file I have doesn't have one, except for one I logged into. And like, there's this new little icon at the top, and it wants you to like email it in, send emails to it, and it will automatically create the invoices based off the conversation in the email. Like, they're testing out this new beta thing. It showed up in one of my cheapest, smallest clients, and like I saw it for 2 days and then it was gone. It was like a leprechaun. It just disappeared.
Did you try? Did you try to do it?
I tried playing with it, and I have a Loom video because I was like, no one's going to believe me about this. So I turned on Loom immediately to record. Like, it does exist.
Does exist. Oh, cool. Yeah. That's tough, though, for the people at those locations. But it'll be interesting that if they report out that they're actually rehiring that many people, I would doubt it. This is a clear cost-cutting situation. And yeah, I don't think you could spin it any other way at this point.
I mean, yeah, it does make me wonder, because that's an interesting statement to cut the labor and say, but we're bringing it all back in another form. Now, they are going hard after AI. They mentioned that back in March, saying that they were even trying to work with other providers like OpenAI and Anthropic to test out their softwares in the system. I mean, it's coming, dude. Everyone's building AI in there. Now, a bunch of systems, AI is still garbage, but I mean, Intuit's got the money to put something serious in there.
This is true. Yeah. Time will tell. All right, let's move on to our first activity today. So I had one of these things come up the other day, and I used to love this back in my youth. I couldn't even think of what the name was, so I had to like Google 5 different things, so I figured it out. But it's letter equations. Are you familiar with this term?
I am, because you brought it up last episode when I asked you how many keys were on a standard piano.
Oh, is that what it was from? See, like the things, the little
you asked like, what's that thing back in school? And they're like, there's 88 Ks and a P.
Yeah, and I was like, let's put a counting spin on that. So for our listeners, one example would be is 52 C in a D, which would be what, Tyler?
I would guess 52 cards in a deck if we're keeping this appropriate.
We are keeping this appropriate. That is correct. So I put in, I think there's 9 of these, and I have them in front of you without the answers, and I will read them, but I know looking like visual is very important with these, in my opinion, so I want to make sure you have them. So let's run through these, see how many Tyler Otto can crack of our letter equations. So the first one, 10 KE in GAAP.
Well, I know the GAAP is probably generally accepted accounting principles. So 10 KE key principle. I don't know what that E is. I'm going to go 10 killer elephants in generally accepted accounting principles?
Ooh, we'll give you that one. Key elements, key principles, either
Okay.
one can be used. 10 key elements in general accounting principles.
All right.
Accepted one. All right. Next one. 3 S in the S of CF.
That would be the 3 sections in the statement of cash flows.
Ta-da! Nice work, sir.
What are they, Jeremy?
Ooh, they are operations, cash from operations, cash from investing, and cash from, oh my God, I'm blanking on fixed asset? No. Yeah, investing, and no, I'm going to fail it.
This was question jujitsu on you.
Oh, man.
Financing.
Financing. There's an F in there. I know that. Son of an F. Man. Oh.
I love a good question jujitsu. I love the statement of cash flows because so often, even with experienced clients I bring on who are savvy business people, that's the one statement they just never spend the time to really analyze, look at, and understand. And I mean, the old saying, revenue is vanity, profit is sanity, but cash is king. It holds true because a lot of times they're just like, okay, revenue's great, so we can tell everyone how successful we are. Profit's fine, but they forget to make sure that cash flow works. I adore that statement.
Yeah, we have a client right now actually that is in a little bit of a cash crunch, but like numbers look pretty good overall, but there's some collection things out there. Yeah, you need to make sure that that cash is coming in the door, even if the P&L looks rosy. Yeah, for sure. All right, number 3, 12P in an FY.
That would be 12 pine cones in a frisky Yellowstone. No? Oh, I'm going to go periods in a financial year then.
Yeah. Periods in a financial year. Well done. Do you ever have any of those clients that do 13 4-week periods?
What? No, I've heard of like people, some accounting platforms will let you do the 13th period, which is just a single day where you can do year-end closing entries, but it doesn't affect the monthly financials, so you don't have a goofy look in December. But I have never heard of 13 4-week periods. Please explain.
Yeah, so like their accounting is 13 periods of 4 weeks, and so they do 13 closes, and that is what they do statements on, right? So it's interesting because it kind of takes away from the quarterly look at it, but there's also benefits because if you do bi-weekly payroll, you always have 2 payrolls in those periods, and you're rolling through it that way. So there's a benefit there. I still think it's kind of wonky because you're kind of hammering home always these 12 months and having it there, but I've seen it. They said I was successful, and they said it also kind of breaks up month end a little bit, even though there's a little bit more or like one more of them in the year. There's always the same kind of ritual. You're getting rid of a lot of accruals when it comes to payroll and things like that, that it works out well for them. So, I don't know.
Interesting. The one curious thought I have on this is you and I have built our firms off efficiency of software. What tool out there is working with 13 periods?
Ooh. Yeah, I don't know. I don't know if any of them I would know cloud-based tools that would do this. I would think some of the beefier SAP nonsense you could probably set up whichever way you wanted. But yeah. I'd still, if somebody told me they had this, it'd probably be a hard no. Or I'd like double their cost because I got to do another close.
Fair enough.
Yeah. All right, next one. 14,600 is the SD for SF.
Is 14,600 San Diegoans for San Francisco. They're rooting for their neighbor.
Oof. Not even close. That would be the standard deduction for single filers, my tax.
Oh! Here's the honest truth, Jeremy. Yeah. You detest taxes so much that I would never even suspect you throwing in a tax question.
Oof. Yeah, I got to keep you on your toes, man. So I liked that one that was out there.
That was fair.
Yep. All right. Next one is 600 D paid to C that requires a TNN.
Okay. $600 paid to contractor that requires a 1099.
Nice. Good save there. I like that one too. I'm like, ooh, how do I do the 1099 in there? I'm like, oh, yeah, we're going to just totally put in some initials and just roll with it.
I can live with that. Yeah.
I question for you. I had someone ask me this the other day. So if you're working on cleanup for a client, and let's say they engage you now and you start cleaning up 2023, do you work with them to file 1099s for 2023?
I don't want to put this on recording because the IRS is going to come back to me when they're like, hey, you can't claim ignorance. We have it on audio. I put it up to the client. I say the rules are you should be going back and issuing corrected 1099s. You should be doing this. I highly encourage it. It's up to you if you want to pay us to do that because we're not going to do it for free. And if they say they're not going to pay for it, I'm not going to do it. And to be honest, most times they elect not to do it. But yeah, I tell them like, if I'm doing your taxes and signing off on the tax return, I'm definitely not doing it unless you do 1099s because I have to certify on the due diligence checklist that you issued all the proper 1099s and I know you didn't. So I will not do the taxes unless I can ensure those went out. Or I will mark that little box that says, no, they did not, IRS. Go after them.
Yes. Yeah. And that's the right answer too. I think this is it's a tough one that's out there. I feel it's absolutely the right thing to do, but I feel like it's going to cause more problems than it is solutions for it trying to strictly align to that compliance thing. But legally, yes, that is absolutely what we need to do out there.
This audio clip's going to come back in a court of law one day and kill me. Thank you, Jeremy.
You're welcome. All right. What do we got next here? 3S in FRs.
3 sisters in friggin' Rexburg, Idaho.
Oof. Negative. Just three statements in the financial reports. Standard. Right? Got your P&L, your balance sheet, and your statement of cash flows that we talked about already.
That was too easy. I feel a little ashamed, but I like my answers.
Yeah, no worries. All right, let's try the next one. All right, 1040 F for IITR.
I feel like there's an extra I in there. I don't know, but you're trying to be clever by saying 1040. Like that is clearly a 1040 form for individual tax returns.
Yeah, it's the individual income tax return.
Yeah. Income. Okay, fair enough.
All right, you caught my little play on words there. I'm not going to call it a 1040 and throw it out there for you. All right,
hit me with 2 more.
All right, 21 FITR for Cs.
Sorry, I got a glimpse of the last question and I'm already terrified. I have no idea what the C is, but it's just FITR. That has to be federal income tax return. So 21 equals federal income tax return for C. I'm going to guess that C is Conrad, your friend named Conrad.
Ooh, so close, but yeah, I will give you that one. The federal income tax rate for corporation.
Oh, yeah. No, I did not get that one.
That's close enough, man. All right, let's finish hard here. All right, last one. 1 million DJ told by TO.
The only thing that's coming to my mind, I don't think I want an audio clip of. 1 million. You didn't put commas in there. Come on. What kind of accountant are you? 1 million disc jockeys told by Tyler Otto?
No. 1 million dad jokes told by Tyler Otto.
That was a much better joke. My brain was in the gutter.
You got 5 or 6 of them. Good job.
I'll take it. For those of you who don't know, follow us, Specialty Bookkeeping, if you want dad jokes in your LinkedIn or Instagram or whatever every Friday, because that's what we're good for. Maybe not much else, but hey, come find us there. Well, Jeremy, with that sound, it is now halftime, and it's the part of the episode where we go to the sidelines and get ourselves a nice little snack. And Jeremy, this week, we are snacking on MakersHub. Have you heard of them, sir?
I had only heard of them because I think we were chatting about something either on the show or just with brotherly love chats that we have where you brought them up. So that is my extent of my knowledge about MakersHub.
Okay, so MakersHub, I mean, Jeremy, first of all, how many friggin' platforms are there that you can submit invoices and have OCR read it and push it to your financial platform? Like, dude, you could throw a stick in any direction. Swing a stick, wag a stick. I don't know what you do with the stick in the analogy, but you can do it and end up hitting a receipt document capture platform. However,
Yeah.
I urge all of you on this, listening to this podcast, both of you listening to this podcast, to go check them out if you are in the construction, restaurant, any industry where you need to break out your invoices on line level detail on the regularity. Because if you do, this is by far one of the most impressive softwares I have seen when, let's say, taking a Home Depot invoice. So you got a contractor, he's doing a lot of construction, and construction clients, they want to see everything broken out at the item level by materials, wood and siding and framing and whatnot. And it will go through and read that and use AI to then categorize it. And it's better than just like a standard guess that you would get indexed. It's actual AI technology that's reading that. It's pretty good, but it's also learning. So if you always code this 2x4 to wood framing instead of, I don't know, siding supplies, it's going to remember that going forward every time it sees it on every future invoice. And it's breaking it down at line level. So if you're a restaurant on the high end and you're breaking out your cost by protein or produce or grains, because I know a lot of higher restaurants, they do break it out to that detail. It's going to get every single item in the invoice, even split out the taxes or freight or everything else proportionately amongst all the items. It is brilliant. I highly recommend you watch a demo. But Jeremy, did you look at the pricing?
I did after you brought this up, and I'm intrigued because it's really based on the volume of bills that go out there. And I feel like it's maybe a little pricey for the number you get, but I don't know. Like, if you need that level of detail and that works for you and works really well, it's probably not. Right. Yeah. So if you look at, can I go through the tiers? Like,
hit it.
The starter one is $100 a month, $99, right? And you can do 60 bills a month, right? And it seems like it has most of the cool things there. But then also $1.50 for every bill over 60. Mm-hmm. I'm trying to think 60 bills a month. Like, if you could almost eliminate the AP manual entry process, $100, that's a no-brainer, right? So, like, if this works and works really well, that's not that bad.
I honestly want to try it because we have one client that builds custom homes, and we have an employee that 25 hours a week, this is her only client she works on. Just doing AP for that. That's how much this client pays us. And I'm looking at this and thinking, can it really like simplify that? Could I take time from that employee and get them on a different project and save time with this sort of software? Maybe, because it's a hefty price tag, but could be worth it.
So yeah, then the next one is at $200 a month, and the volume goes up to 160 bills with $1 in excess of that, and then it's like the $500 a month where it looks like you get all the bells and whistles and you can do whatever you want. My question with this, especially when you talk about contractor things, is how does this help you? Because they want job costing, right? Which again, if you use QBO, you're using projects typically to do that. Does this work for that?
Yes.
That's my question.
So it works for that. And the other thing too was, so Ted is, I should know what Ted's title was. I talked to him at Scaling New Heights in San Diego at Accounting Day Forum. Like, I should know what his title is. But anyways, Ted was the guy showing me the platform. And when he was bored, he's like, let's just go to the internet and find like one of the worst invoices we can find, a handwritten gross one. And he just found one, on Google image search, uploaded it. And it took a handwritten invoice that was like in cursive and perfectly mapped it out and like read it. So it's not like what Dext or HubDoc or anyone else is doing. This is truly impressive.
You sure he didn't set you up and he put that out there himself and was like, it's a plant? Like, let me look at this and I'm going to pick this cursive one.
Then he was very convincing. And let's be honest, I am gullible. I am a sucker. I am an easy mark. Kudos to you, Ted.
Yeah. So my question with the project or the job costing is, how do they know, or do they make it easy for you to assign the amount by job then, right? Because like that, I think about the nonprofit thing, that's how we do grant tracking. We do pretty much job costing, but you want your number to go down to zero at the end, not maximize profit. You want to make sure you're spending it all and you have the backup to support that. And what if you're buying your 2x4s and you're buying 400 of them and they're two different jobs? Can you split it? How do you that to me, still, if you make it easy, it's probably worth it. But it's a little bit extra work in there to figure that all out.
Well, that's going to be extra work because it's going to do line level detail, but then you're going to have to go apply a different customer to every line, which that's the bookkeeper's job because it's not going to say that on the invoice. There's no way MakersHub can figure that out. I'll be honest, the construction clients I have, They go to the register and say, okay, check all of this stuff out and put it under the Van Grohl job, and then check out this stuff, put it under the Otto job, and then check out this stuff and put it under the Robinson job. And then we get 3 separate invoices coming over in email. And I would say that's the easiest way, is get the people checking out at the store to do it right.
Yeah. One other opportunity too, we have a client that actually a legacy client before we niche that's a painter, right? And bookkeepers, painters, I'm sorry, it was before I knew you guys, I swear. But they have an account with Sherwin-Williams.
I have 2 painters, so don't tell them.
Oh, snap. They have an account with Sherwin-Williams, and I believe, I'm not mistaken, they do separate checkouts, and it's got the job number or something on the receipt with Sherwin-Williams. So like that would be an opportunity if you have a painter and maybe the Holman's figured this all out already, but like you could pull that in. And I wonder if they could be like, hey, if you find this number, it goes to this job. You can map this here in QuickBooks. Sounds to me like with all the cool things the tool is doing, you could help it learn that process too and just automate that more than you think.
Yep. By the way, for the listener that doesn't know, when Jeremy said bookkeeping for painters, I'm sorry, and the Honins, those are friends of ours. The Honins own bookkeeping for painters. I realize some of you may not roll in our circle and know who is referring to. So, little inside baseball there.
I just think everyone knows everyone.
Well, Jeremy, with that said, let's jump on to our third segment this week. And we're going to play a game called Entity Identity, where I'm getting a lot more into the tax game right now. And there's some basic stuff with entity selection for businesses that seems very basic, but there's a lot of complexities that can hide behind it. So I want to ask you 5 questions about different entity types for tax purposes or whatnot, and see how you do what you know so far. You ready, sir?
Let's do it.
All right. This is the simplest tax filing entity type, and it often utilizes the social security number of the business owner for federal tax purposes.
Sole proprietor.
Easy peasy. We're starting off right for you. Next, a sole proprietor. And here's the one thing that always interests me about sole proprietors is people often say, like, you should never have one. Do you agree or disagree?
I think there's a place for it, right? Like if this is just a side hustle that you have before you can really grow it, or you want to keep it that way, you can say setting up a business isn't the hardest thing in the world, but it takes time. And there are regulatory things and compliance things that you have to do that just is going to add time to it. Whereas you do this, you throw it on Schedule C and you return, like there's so much less compliance that's out there.
It's, let's say you are starting a half-assed podcast about accounting and it's just you, not a partnership. Like there's no reason to not just do it. You're not a business generating money. And the real thing about having an LLC instead of being a sole proprietor is the LLC gives you limited liability. Well, what if you're starting up a side hustle that has no liability, like a podcast? Like there's no reason. Now, if you're going out starting like a dog walking business for your neighborhood, you're taking out people's pets, and if something happens, maybe you do want liability coverage. You're taking out an animal that's not yours, and if it attacks a random stranger, you might be liable. So you got to know when you need that LLC. But if it's a proof of concept of an idea, or it's a small little thing and you're not making enough income where trying to avoid taxes on income is really a thing, the sole proprietorship has its place. I don't think it should be demonized as you should never do a sole prop if it really is just a small side hustle.
Yeah, I would agree.
Question 2. This type of entity is taxed at the entity level before passing profits/dividends on to its owners.
Gonna go, taxed at the entity level before putting profits to its owners.
Profits/dividends.
That's gotta be a C Corp then.
Well done, sir. Yes, it is a C Corp. But, the one big bit of misinformation I hear all the time from people that register to C Corp is, I only want to pay 21% in taxes. And they think that that's their loophole if they make a lot more money, is by having their business as a C Corp, they only pay 21% on that income. No, what happens is the business pays 21% tax, and then your dividends are taxed at individual capital gains rates, which can be anywhere from 5% to 20%, depending on you as an individual, which that can get pretty hefty pretty quick. I run into clients all the time that do not realize that. Yeah, it's a misnomer.
Yeah, when do you think it is a good idea, if ever, that a smaller business would set up as a C Corp? I fail to see like, when you're a public company, you're ginormous, right? You want to get public IPOs and you want a lot of ownership stuff. You got to go that route. But I
Yep.
don't see the argument for doing this if you are a air quotes small business.
So there's a few things that comes in. Like, yeah, if you're going to raise a lot of money, like S corps are limited to 100 partners.
Yeah.
So, if you want to go big and raise a lot of money, which I do have hotels with, 60, 70 owners that each put in 100, 200K, they can still be S corps, but one day I think I'm going to have a client that goes over that 100 mark. So yeah, if you're going to raise enough money, have enough owners, that makes sense. There is some stuff with like health reimbursement accounts and the tax strategies. I'm not going to get into those now, but like even shareholders can be in on the medical benefits, whereas with LLCs and S corps, you can't. So there's some fun little tax strategies. But again, your question was, when is it right for the small business? Unless you have a dedicated reason where you're really working something over, like maybe you're rolling over your retirement, you're doing a Rob's rollover, a rollover business startup. So you're using retirement funds, rolling over and self-directing it into your business. There are times where corporations might come into play, but man, it is super rare. You better have a darn good reason. Otherwise, do not believe the shady lawyers out there that want to charge you a higher fee for setting up a C corp for you because you'll avoid double taxes. You won't.
Yeah, not at all.
Question 3, Jeremy. So let's say two goons start a business together, just making money out in the wild. Whether it was a podcast or maybe they bought a rental property together, a little cabana that the two of them can run. Their names were Jeremy and Tyler. Come tax time, how should they file their taxes? This is multiple choice. A, each of them should have a Schedule C on their tax return accounting for their half of the profits, or in our cases, losses. B,
Yep.
one of them should file a Schedule C and then report a portion of the profits or losses as a 1099 distribution to the other. Or C, they should file a 1065 partnership.
Gotta be C.
Now, here's the thing. I encountered this where I had a client that said, some friends and I bought a rental property together. Everything's in their name. We just contributed money, but here's the info of the expenses that are shared to a Schedule C. And it's like, no, where's the partnership return?
Oh.
I've seen this in the wild. Now, the hard part is some businesses, I've seen people try and do the Schedule C for each of them and just say, here's my half and here's their half. Is the IRS going to come down on someone that made 30 grand in a year that accurately reported their income and expenses? Probably not. Because at the end of the day, it's a wash. It's not right, but it's also the IRS didn't get shortchanged anything. But if you ever see this happen, for dear listener, 1065, make them do that partnership return, even if there is no LLC.
Yeah, but can they do that if they haven't legally set up a partnership, like with documentation that it's its own thing?
Do you want to know the real answer?
Yes, typically.
Consult your tax planner.
That is my go-to on all the things. I was just talking with a banker yesterday on this, and what were they? I don't know if they were saying that their banker is also some other advisor in their industry, and I'm like, yep, just like the accountant is always your business attorney, right? Where all these questions, I'm like, I have no idea. You need to take that to somebody that has Esquire after the name.
Yep. Question 4, Jeremy. This is an easy one. True or false? An LLC limits 100% of the liability between a business and its owner and vice versa.
Anytime you throw around 100%, it's got to be false, right?
Well done. False is the answer. And the big thing here I'm throwing at you is, obviously an LLC doesn't protect you if you commingle funds and you don't respect the corporate veil. That's its own falsehood there. But secondly, the key was in vice versa when I said it protects the owner and the business from each other and vice versa. A standard LLC protects the business owner from anything that happens at the LLC level. So let's say you have a rental property, someone breaks their femur there and they want to sue. Well, they can sue the property, they can sue the business, but they can't come after you and your personal assets. They can't come after your home. They can't come after your personal bank accounts. That LLC protects you. But Jeremy, Let's say you have a kid, a teenager that just starts driving, and I hate to say it, but they blow through a stop sign and severely injure someone. And Jeremy Van Grohl is on the hook. They can come after Jeremy Van Grohl and all his assets, including his companies. The companies are not protected from you. You are protected by the companies, from the companies by your LLC, but the companies aren't protected from you. But did you know there actually is a type of LLC you can put in place to protect your assets from you?
No, I did not. What is this thing?
So this is called a charge order protection entity, or a COPE. Now, you need to talk to an attorney to get this in place. I am not going to be the ultimate end-all be-all on this, but essentially what it is an entity you can put in place where it is deemed that all the assets belong to the COPE and not you. And what it does is, first of all, it doesn't stop the IRS. If they come after anything, COPE ain't stopping nothing. The IRS gets through the moment they want. If you go through a divorce, they're getting through that COPE and getting to all the assets no matter what. But if there's a judgment levied against you, they can no longer get into the COPE and break it up and say, hey, we're going to force you to sell all these assets and liquidate to pay out a creditor. Instead, you are going to be required, you're going to get a charge order from the judge that is going to require that any disbursements made from that LLC go to the creditor. Well, you're in charge of that thing and you can decide to never issue distributions. You can leave all the money in there, let it grow, and now your creditor can be stuck waiting decades for a payment. What it does is it doesn't necessarily make the creditor go away, but it forces them to settle a lot quicker because you can say, hey, we can come to a better agreement, or you can wait indefinitely because I can wait you out.
Wow, that's interesting. I love how you threw the divorce example out there because I could see that being dicey. The only thing that I wanted to riff off of that was you are protected as an LLC for liabilities against you personally, unless you're commingling your books with personal transactions, right?
Oh, man.
So that's why we provide that value. And every single time where I get questions from people like, what do I do with this when they're personally doing that? No, tell them to frickin' stop. And scare them with all of their personal assets getting seized if anything happens in the company.
I tell my clients that when you commingle, you get rid of the first L in the LLC. It's no longer a limited liability. It's just a liability company. You are hosed.
That's a good spin. I love it.
Last question, Jeremy. Which entity election allows an LLC owner to avoid paying payroll taxes on any distributions beyond a reasonable salary?
That is an S-Corp.
See, I'm asking you tax questions. You know what you're doing, man. Yes, the S-Corp election, so you pay the reasonable compensation. And then, Jeremy, what happens to the magical distributions I pay myself? Let's say I made $100,000 in profit. A reasonable salary based on rcreports.com is $60K, so I pay myself $60K in payroll. What happens to that remaining $40K?
You take that as a draw, and I don't know what the tax treatment is.
You avoid the self-employment taxes, the 15.3% on that remaining $40K. The big thing is you need a reasonable salary. And so many business owners are like, oh, well, I'm going to have my reasonable salary be $10. And then I'm going to take the other $99,990 as draw and not pay taxes. And that's when the IRS comes back and says, no, you're not fooling anyone, and they slap you with a big fine, take their money, plus penalties, plus interest. You don't want to do that. Don't let your clients do dumb stuff.
I hope that example wasn't true. If not, I want to check out your rc.com answers because I might have too high of a reasonable compensation then because we do similar tactics and responsibilities in our firms.
Jeremy, 5 for 5 on a tax quiz. I mean, look at you, dude. You know stuff.
I'll get a lottery ticket or something today. I feel like it's a blessing.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
It's that time, our favorite time, Fast Figures, and it's my turn to put you through the ringer. Let's do this. Here's question number 1. The Intuit Connect conference that is out there, scheduled for this fall, what is the cost for a single person admission?
$1,095.
Harley Davidson's famous Sportster motorcycle has its famous V-twin engine. How many cc's is the engine in its more powerful model?
450.
If the business's gross margin is 25% and it has sales of $100 in one day, how many dollars are the related direct costs?
$75.
Yesterday, this is going to be out on 7/18. Yesterday, the 17th of July, was National Hot Dog Day. Within 5, what is the record number of hot dogs and buns eaten in Nathan's famous contest?
46.
How many minutes do the fierce MLE competitors, Major League Eating, have in that hot dog contest?
1 hour, or 60 minutes.
According to generally accepted accounting principles, what is the maximum number of years that a private company can amortize goodwill?
The maximum number, it's the life of the loan. 30 years?
What is the longest maturity period of a U.S. Treasury bond?
50 years?
How many blue chip stocks are included in the Dow Jones Industrial Average?
200.
How many columns are included in a standard accounting journal?
2.
And according to the nursery rhyme, how many little monkeys are there jumping on the bed?
10?
All right, Tyler, how you feeling about that one? I was maybe
a little beat up.
Yeah, I maybe took it to your little rough. What was the joke from Revenge of the Nerds? What is the dirtiest thing ever said on television?
What?
Ward, I think you were a little hard on the beaver last night. All right, let's. All right, so what is the cost for the single person admission to Intuit Connect that's happening in the fall? You said $10.95. I didn't give you a window. I'm going to give you this one. You were within $100. It's $11.95 or $1,200. Did you see in this though that now that you can only go to this, that they're sold out and by invite only?
I did. So it was interesting. So I was at Scaling New Heights, or it was like the week of, when they opened up tickets. And it was like they weren't letting people know ahead of time it was going live. Then they send tickets are live. And then with like in a day, it was, well, we're closed. It was blowing my mind. But then I went to a session at Scaling New Heights, and Liz from Appy Hour, Liz Scott, she's on stage. And before her session, she's like, raise of hands, who here got an Intuit ticket? Like, is anyone going? No one in a room of 300 raised their hand. She's like, who bought these tickets? And someone from the stage is like, from the audience was like, Liz, are you going? She's like, no, I didn't get a ticket. Like, who is getting these tickets? And it sounds like right now they are only offering them to invite only people. And I think it's like, I applied to speak there, and the topics, it looks like they're trying to go after bigger ticket firms, bigger ticket companies. Like, they're restricting the guest access. I have nothing to prove this, but it feels like they're trying to make sure their audience isn't baby bookkeeper businesses.
Yeah, and how elitist is that? Because even when I looked at this, it said something about for large accounting professionals or leaders in the whatever. It just seemed super elitist. And I was like, yeah, they probably have 80-20, that 80% of their revenues come from 2,000, 5,000, whatever big firms. But I feel like you're really limiting that. And why not just get like a bigger venue and like make it more open to people? I don't know. To me, it feels gross.
I'm going to log into my profile and change the number of employees and how much money we make every year and see if I get an invite tomorrow.
All right, let me know how that goes. So about $1,200 and you can't even go. Anyway, all right, next one was Harley-Davidson Sportster. Well, how many cc's is in its larger engine? You said 450,
Wow.
1,200 cc's in that big old.
That's a lot of credit cards in an engine.
Yeah, I actually bought one of those right out of college with money I had left over from my student loan application. Was that a good financial decision, Jeremy? No, it was not, but it was fun.
And now you do people's financial planning.
I love it. All right, $1,200 there. So if a business's gross margin is 25% and its sales $100, how many dollars is its related direct costs? 75? That's correct, $75. Tomorrow, or yesterday when we listened to this, National Hot Dog Day, Nathan's always has their famous hot dog eating contest. I think it's in New York somewhere, right? I don't know what it is, but
it's like Coney Island, right?
Yeah, Coney Island, right. Yeah, the hot dogs. Record for the number of hot dogs and buns eaten, you said 46. It is 75.
Wow, that's Joey Chestnut, right?
Well, I was just going to bring it up. There was controversy this time because
Whoa.
Joey Chestnut could not compete because he now has a sponsorship, or what is the right word when you're promoting something?
Affiliation?
You're the sponsor? No, you're the...
I don't know, because we don't really get sponsored that much, so this is not our wheelhouse.
I can't think. It'll come to me later. But yeah, he is in bed with a separate company called Impossible Foods that makes hot dogs from plant-based meats. So because he has this affiliation with this other company, they had to go to negotiations if he could do this, and they couldn't come to an agreement. So he was not allowed to compete this year.
You know, it always blows my mind. You never really think of the competitive hot dog industry to have politics, but sure enough, every industry's got it.
And I always think, too, they're like Oscar Mayer is big in Wisconsin, and I've known people who have worked there who will never touch a hot dog again after seeing the process and what goes in it. And maybe the plant-based ones are the right way to go. All right, so in that hot dog contest, how long do you have to eat it? So remember, 75 hot dogs were eaten as a record. How long do you get to eat them? How many minutes? You said 60? 10 minutes.
10?
You have to eat them, yes. I think I could maybe, no, I could not do 46 in that. But yeah, 10 minutes, 75 hot dogs. That is ridiculous.
Hold on, how many that's... What?
That's
a hot dog like every 10 seconds, right? Am I doing math here wrong?
No, I think that's about right. 7.5 hot dogs a minute. Oh, man.
So like every 8 seconds you're putting down a hot dog?
Yeah.
Dude!
I don't know how people do this, and I feel like, what are their bathroom facilities like the next day? It's got to be just terrifying. Also, yes, I like that they're called the MLE, the Major League Eating. Yeah, everybody's got to have a acronym out there. Next one, general accounting principles, maximum number of years that a private company can amortize goodwill. You said 30. I see it's 10, but let's discuss. If I think about goodwill, you were talking about loans when you had the question. If I think about goodwill, you know, you loan fees, loan things like that. But a lot of the inception of goodwill is when you're purchasing a business for more than what its book value is, and you get goodwill with customer lists or any additional money you paid. I did a reasonable, maybe even over typical unaccountable amount of research on this one and found 10 in all the places.
That's fair. I was thinking loan fees, because standard guidance is administrative closing cost is over the life of the loan. But you're right, goodwill, that's a whole separate beast.
Yeah, but I also said it was just for private companies, that public companies and nonprofits could have a longer term. And I'm sure with nonprofits, the IRS doesn't care because they're not getting tax out of it anyway. But I'm trying to think of why public companies could. But I could see if you had this huge acquisition and paid a ton of money for them, that they would want you to spend that over a longer period versus having like zero tax liability for 10 years because you spent all this additional money for whoever acquired, I don't know, Ask Jeeves for millions of dollars and then lost all its value.
Oh, Jeeves. I need to go back to him.
Oh, yeah. Have you noticed a theme yet, sir?
That Tyler's incompetent?
Oh, that has been prevalent. You are correct. But no, each one of these had paired answers with the same number. So we had $1,200 and 1,200 cc's. We had 75 hot dogs, and we had $75 in gross margin.
No,
10 years.
But I mean, that probably would have helped me to realize during the quiz, but no.
You would have needed more right answers for that. Anyway, longest maturity period of a U.S. Treasury bond. You said 50 years. It's 30 years. Let's see if we can guess what the next answer is. How many blue chip stocks are there included in the Dow Jones Industrial Average? You said 200. The answer is, Tyler?
30.
30. All right, 2 to go. How many columns? This one I like to talk about. How many columns are in a standard accounting journal?
Depends. Like, I mean, debits and credits. You could post a standard journal with just nothing else, but I guess you do need an account number. So is that, or what account it's going in? So that's the third column if you're talking like that. And then usually a description is in there. So it depends, because like the journal itself is just a debit and credit, but then usually you see at least 4 fields.
Yeah, and the date. So
and the date.
5. Yeah, that's what I found a lot. Like, to me, this is super debatable, right? What the standard amount would be. But yeah, it's typically date, description, account name, debit, credit value, right? And if you do QuickBooks, they typically have 6 because there's a name field in there too that they want you to be able to sign the vendor or the customer or any of that stuff in there. 7 if you do classes, 8 if there's locations. You can go on and on, but yeah, this one gave 5. So rolling into the last question then, how many little monkeys are jumping on the bed? You said 10. It is
Apparently 5.
5 little monkeys jumping on the bed.
We start at 10. We make our kids count for longer.
Ooh, yeah. Just gonna get them babies to be good accountants. Yeah, that one was a little rough, buddy. I think you got hand a couple of them, whatever. But there were some tough ones there that I could stick with the theme.
Yeah, I'll take it.
All right. And with that noise, we are clear to the time where we're going to talk about our winner of the weeks. So I don't know if you saw this, sir, but Klarity Books, which is different than our friend Brooke's Klarity Bookkeeping. We love her.
I was going to say.
No, Klarity Books. They just put out a $70 million Series B fundraising out there to bring in capital in order to increase their what? What do you think it is?
Their AI division?
Yep. They typically use, or they're not surprisingly, there's an AI angle to this, right? Company uses AI to help process data and contracts and internal records, eliminating the need to do it manually. So what they're building or they can do, and this is intriguing to me, is you could take a vendor contract or a customer contract or that and feed it into their system, and it will spit back all of the major terms and fields and things you need as an accountant that are pertinent to you, and skip all the legalese that we know we have to scan through. And it's like, I'm looking for numbers. There's a number. I better read that section, right? So yeah, that is their take on this, and raised a whole bunch of money to keep growing it. And I'm intrigued by this because I do with a lot of grant applications or grant agreements, and there is all sorts of jargon in there that I'm scaling through 50 pages of a document, trying to find out, like, what's the reporting? How long do they get it? How much is it? When does it come out? Right? So I think this is pretty cool and would be a great benefit if it works. But I'm just wondering how good that would be, or how good can they get it with all these 70 million buckaroos?
So it's interesting because there was other platforms at, which one was it? Scaling New Heights, that were talking about like a similar thing. Like Digits was advertising that soon enough you will have the ability to just upload a proposal or a contract, and it will automatically create the invoice and billing terms and the schedule that can sync to the software. Like, you don't have to do any of the work setting it all up. You just upload the contract, it reads it and does it. So, I'd be curious if that also would work for this kind of world. Everyone sees what so many of these companies see what the future could be, and the tech is out there to build it, but no one has built it yet. They're all just saying, here's what we're shooting for. Is anyone going to get there and actually make it useful?
Yeah.
I don't know.
And I wonder the liability on this, and when do we get to the point where we have our first litigatable case where it was like, we relied on AI to be able to drive these things that we're doing, and it turned out not to work, so we didn't do our accounting right, or this happened.
The double checks are going to be huge because, this is the same thing of like when that lady drove into the ocean because Google Maps told her to. It's like, you can't trust it. Like, there's always going to have to be human intervention behind it. I look at it like, there was one story I heard told out there of like, you have the AI constantly, like, it doesn't know human tone or whatnot. And, the little AI assistants they have on meetings, right? Like Fireflies or Fathom or whatnot. Well, 2 consultants, they join the meeting and they're waiting for the client to join. And for 10 minutes, they just sat and chatted because the client didn't show up. Finally, 15 minutes in, the client shows up, they have their meeting, and the AI assistant immediately sends out the summary of the meeting afterwards to everyone involved. And it starts with, client was 15 minutes late and did not apologize. That was the first line of the AI summary. And it's just like, you can't trust the AI on its own. Like, it's factually accurate, but do you want to let it just run and do its thing? I don't know. I think this is going to be another great tool. But yeah, you're just going to have to learn how to use the tool. You can't just set it and forget it.
Yeah, and that's a slippery slope too, because we always in our meetings are like, wait, don't start the Fathom yet. Let's get all the hot goss out of the way and other things we're going to talk about. And now start the Fathom, and then we can talk about business. But yeah, cool. Yep. All right, well, let's get over to our loser of the week. And hear me out on this one. Loser of the week, Entrepreneurs. So
Do tell me why.
Yeah, I'll tell you why. So Inc. magazine, can you call it a magazine if you read the article online? Is it a webazine? There's a fancy word that I'm not thinking of, right?
I don't know.
Yeah, but they talked about how entrepreneurs are struggling right now because of the lack of accountants not being able to support their business. So we talked about how CPA numbers are dropping because of the education and the experience requirement, and just overall how the industry is struggling, luring young people into our sacred profession. But yeah, saying that this is getting hard hit by entrepreneurs as well. Like it's a tougher economy today. We need to have this insight. We need to have our numbers in front of me and the technology that we have the insight and the numbers and they're readily available. So, firms just struggling to get through basic accounting workload as the people aren't there to support it.
Yeah, I mean, I see it. The amount of sales consults I do where people are like, I can't find someone to do my taxes. I can't find someone to do the books. And they're all price sensitive. They all think this should cost $250 a month. And the costs just keep going up, dude. Like we're not getting cheaper. We're not getting easier. And it seems like I am not running into competent competition often.
Oh yeah, absolutely. And funny you said that. Like exact verbatim from this article was, you'll have no issue finding someone to do your tax return. Really? I'm not sure about that. But if you want the help of a true business partner or advisor, that's where there's not many firms out there. So one more reason. Yeah.
No, you're right. The advisor part. Because to be honest, you're right. You could find someone to do your tax return. They're going to say, give us, I'm going to ask these 6 questions and I'm going to put out the world's most basic tax return. I'm not going to do anything above and beyond. I'm not going to help you out. I'm not going to look for deductions. I'm not even going to make sure stuff's right. I'm just going to push it out the door. And you can find those for $300 all day, every day. Problem is most of the clients I'm talking with, they aren't as price sensitive. They want someone that's going to be like, look, yeah, you could restructure this and save 20 grand. And they're happy to pay me 3 grand to find it.
Yeah, absolutely. Again, it just means the more you can get the knowledge to be able to provide this proactive information for people, you are going to be in high demand and can fetch a high price for those type of services.
That's an interesting, yes, definitely an article I'm probably going to push out there more to a lot of these business owners that like, hey, just remember how good you got it with us, because most companies are, that subtle, like, just remember you got it good. Yeah. Well, Jeremy, that is all the time we have for this week. Be sure to, if you're checking out our sponsor, TaxDome today, be sure to go through our webpage because it does help us to, let them know that both our listeners are interested in TaxDome. But more sponsors coming up, a very special guest next episode. I don't even want to say it because I think he's going to cancel on us and realize what a bad decision it is to come on our podcast. So I don't want to jinx it and say like he's coming and then he doesn't. And then, now everyone knows who he got stood up by. But I'm pretty dang excited. Like this is our nerdy man crush, if you will.
Yeah, 100%. I cannot wait. We better bring our A game if we have A game.
Jeremy, until next week, sir.
You as well.